Now let's shift gears a little bit and talk about the inevitable collapse of modern day society. Because life as we know it has been shifting dramatically over the past 5 years. And, a few videos ago, I referenced the Great Depression. And one of my viewers, Rainer, he always sends me long, detailed emails about the economy. And he brought something to my attention that I want to bring to your attention. When we had the Great Depression, we eventually had a full recovery. As bad as things were during the Great Depression, even though it took a full 25 years or so for the stock market to make a full recovery after the crash in 1929, we eventually did recover. But one thing that Rainer pointed out to me is that people's mindset 100 years ago was completely different than today, which is obviously true. What he explained to me is that prior to World War II, severe downturns with the economy or people's finances in general were a lot more common than they are today. So people were more accustomed to long periods of economic hardship. But fast forward to the 1980s, and really ever since the dollar was taken off the gold standard in 1971, the government, along with the Federal Reserve policies, have created what he likes to call the law against recessions. And this is very prevalent in our society right now when you look at what's going on. They do everything they can to make sure we don't enter an official recession when it comes to calculating the data in a favorable way to make things look better than they are, as well as the economic policies to make sure that people continue to have money and credit even during tough times, which means more inflation and more money printing. And because we have this law against recessions and they do everything they can to prevent one now, well, this has led us to a situation where we've had multiple suppressed major downturns for decades. Look at what they did during COVID. Look at the response that they had. Instead of let things fail and let the economy kind of pull itself up on its own, what did they do? They inject $6 trillion into the economy. Back in 2008, rather than let the big automakers and the banks fail, what did they do? They bailed them out and gave them our money. Private companies that were too big to fail. Whereas you go back 100 years ago, there's no such thing as too big to fail. If you were not a profitable business and you were a bank that went insolvent, you went under. That's just how it was. So people were used to that and they understood the rules of the game. But now we've been trying to play with fake rules of the game for too many years, and it's catching up with us. And basically, we have created now a very weak-minded population that is unaccustomed to serious economic pain. I mean, look at this whole government shutdown, for example, guys. The whole government is shut down because they don't want to renew the subsidies for healthcare, and they're at a standstill because of that. The SNAP benefits are supposed to be expiring November 1st, probably by the time you're watching this video. Millions of people, 42 million people, rely on SNAP benefits. Grocery stores across the country are going to see their sales collapse by more than half overnight because of this. 100 years ago, everybody would just said, well, that's just the way it is. Today, we're like, no. We can't let anything like that happen. We have to print as much money as possible or make as much credit available to make sure none of that stuff happen. And then it creates these massive bubbles that lead to the situations that we're in now. But eventually, we're going to have to face the music, and there's going to be a major downturn. And it's going to be very shocking to a lot of people who have never experienced anything like this ever before. Just the national debt problem that we have alone is pretty much unsolvable at this point unless we start running massive surpluses, which that's not going to happen. And remember, it's not just the United States who's doing this. Pretty much all developed nations across the world have a central bank. They print money as well. They have interest rate policies that manipulate the economy. It's not just us that's doing it, it's everybody. So this is all going to affect the entire global economy all at once. Once one major superpower nation has a massive failure in their economy, it's going to bring down the rest of us pretty quickly. So I'm not claiming I know exactly what's going to happen, but I know Rainer is a lot older than I am and has seen a thing or two more than I have. And I like the fact that a lot of people who watch this channel are quite a bit older than me, because I can learn just as much from you as you guys learn from these videos. And when you look at points of view like this, it really makes sense that this thing can't last forever. Sure, they can try to make it last forever like they're already trying to do right now. You know, the Fed just cut interest rates again by another 25 basis points. But what do you see happening? You see mortgage rates jumped up 20 basis points on the same day as the cut. Okay, who knows how much higher it's going to go after that. But we're kind of coming to a situation where they're not going to be able to continue with these games much longer, because the way the system is built, it's not built to handle this much debt and high interest rates. And if they want to keep investors buying these treasuries, they're going to have to offer serious returns that are enticing enough for people to actually want to buy them. And if they don't, treasury yields are just going to continue to rise no matter how many Fed rate cuts happen.